Hi, everyone, and welcome back to John Bachman Now. I'm Bianca Garza. As the Biden administration continues making the wrong moves, Americans growing more frustrated with inflation in this country and how it's hitting their pocketbooks. According to a Quinnipiac poll, Americans give Biden a 34% approval rating for his handling of the economy. Those numbers are worse than Carter's. Yet Biden continues to make his main focus those vaccination mandates. Biden, though, needs to obviously come to the table, get some answers for people, especially with inflation and when it may be subsiding a bit. Of course, his policies are a huge reason we're even here in the first place. Joining us now, business and market analyst Seth Denson, also a Newsmax contributor. Seth, there's a lot to get to today. It's always great to have you here on our show.
Good to be here, Bianca. Good to see you.
Yeah, so first, let's start with Wall Street. Of course, the NASDAQ in correction territory for the first time since March. It's tech heavy, and you say we're seeing that sell-off. And to the average investor, they want to know why and maybe what their move can be.
Well, specifically to tech stocks, and obviously the NASDAQ is very heavy in the tech space, these are stocks that are overly inflated. We've been talking about overinflated and overvalued stocks. Well, no area is greater in this inflation period or overly inflated period than tech stocks, and that's in large part because that's where people were putting money. But you're seeing the valuations on these things, in some cases 30 as high as 50%. So as the Fed starts to talk about interest rates, as tightening starts happening, what's going to happen is people are going to start pulling money out of those things that are overvalued the most. That's going to be tech stocks. That's why we've seen them down over the last few days. They're down near 10% year to date. We are seeing a little bit of a bump back. I think that's just a kind of what we call a dip buy going on today. But I think that tech stocks are going to continue to taper down in the days to come.
And we will get into the Fed. They're trying to ease inflation. Obviously, there's going to be a lot of volatility. A lot of economists saying it's going to get worse before it gets better, Seth. And is there any good news for investors and where they can kind of hold on with all this volatility?
Well, the key is to hold on, right? People get hurt on roller coasters, those that jump off in the middle of the ride. So if you're out there and you're in it, hold on to it. I do think that we're going to see some markets coming down. I've talked about it on this show. I think that we're probably in for about a 5% correction this year. But nonetheless, I think that if you're on fixed income or if you're wanting to move into maybe more stable investments, bonds, high interest rate types of things, look at bond ladders. I think for those folks, this could be a positive. For seniors who are on fixed incomes, we need those money market accounts to generate a higher level of return. If the Fed starts to raise interest rates, we're going to start to see that. We'll start to see the bond market open up. And value stocks, right? Things like oil and gas, orange juice, things like that. Those are typically good buys as we start seeing interest rates go up.
All right, Seth, and we got to talk about the oil prices, of course. They've climbed to a 7-year high. The Keystone Pipeline move by Biden, a complete disaster. And now experts are saying gas prices could reach up to $4 by February. And of course, there's also the situation in Russia and Ukraine, the geopolitical issue here with the Nord Stream pipeline at the center of this as well. So, I mean, what are you concerned about mostly here when it comes to where we are around the world here?
Well, I'm really concerned about the fact that the Biden administration seems more inclined to have political talking points than actual good policy when it comes to energy independence. For years, we were energy independent under the Trump administration. The Biden administration has moved off of that. And they put a lot of political power and economic power in OPEC's hands. Well, it's OPEC plus Russia. Well, guess what? Russia's got a lot of power, and they're yielding that power. I said over the last weekend, that, my faith teaches me that we should fear God. Well, in the global economy, we're taught that we should fear America, right? That fear's gone. Nobody fears this administration and the consequences. And I think Russia is touting that with what's going on in Ukraine. And you've got a lot of geopolitical headwinds out there that aren't priced into the market, that it doesn't take a lot. And it doesn't mean that Russia's got to invade Ukraine, but they're going to leverage that power, I think, in oil and some of these other areas that could impact stocks and markets and gas prices going forward.
Let's bring it home for people, though. I mean, obviously, yeah, as you said, I mean, even Biden yesterday saying it looks like imminent that they will. And no one really wants to get into this tangle with Putin, but, we're watching as the tensions sort of mount there. But bring it home for people. We're looking at empty, bare shelves. The middle class can barely afford to fill up their tank to get to work. We're crippling what is the backbone of America. So, you know the markets, you know where we're heading here. How do we get out of this mess? And what are investors really, poised to do to try and, take some of these unfortunate things that are happening in the world and to just kind of not have it be such a huge impact to their families and their pocketbooks?
Yeah, I think that's a great question. I think for 2022, investors need to take a very slow, methodical pace in how they're approaching the market. You've got to look at it almost on a daily basis. If you're not working with somebody to have your best interest at heart, do that. That's the difference between playing the market and investing the market. If you're playing the market, that's money you can lose, right? And so that's when you're going to look at these cryptos and some of these meme stocks, some of the stuff that sounds funny on Twitter and you want to be at. But for the investor, for everybody that's running their bank accounts and their budgets, this is slow, methodical. Move slowly, manage it effectively, take care of short term right now. We'll think long term in the future.
Seth Denson, we appreciate your insight. As always, we suggest people obviously speak to somebody on their own and just don't rely on our program, but we really do appreciate that insight here. It's always a pleasure having you on. Thanks, Seth.
Thanks so much. Appreciate it.